Hey everyone, how's it going? It is I, the real Randy Chavez. I'm coming at you today with a big podcast with the DeFinity team, co-hosted by my friend Crypto Rain. Now, for some of you that might not recognize, what is DeFinity? Chavez, I've kind of heard you mention it here and there. Well, they're a crypto-based company offering institutional crypto trading on fiat on and off-ramp to institutions and crypto-native firms. It's a new venture by the team DMA Link, who've been running a successful and rapidly scaling foreign exchange business since 2017, with major international banks as partners and over $1 trillion of completed transactions and daily volume of over 1 billion. Like, okay, well, who are these partners? Commerce Bank, Nomura, Danske Bank, Credit Agricole, CME Group, Ibanera. Their exchanges are One Trading, which is formerly Bitpanda Pro. So now that you have a little bit of background, let me introduce you my co-host for today. It is none other than Crypto Rain. How you doing, Pat?
Hey, Randy. Good.
Fantastic. I am glad to get you on here just in time because we have none other than Chris. How's it going, brother?
Hey, great gentlemen. Great to speak to you. I'm loving your studio thing. It's got this touch up. I'm not quite sure it worked. I still seem to be the same old face I was before, but hey.
We like it. We like
great
that
you're
you're
on the show.
Thankful that you're here. Now, for people that don't know, we've had Manu on the podcast a couple of times, but for you, tell us where you're from, what your position is at DeFinity, type of value you bring to the table, and all that.
Yeah, no, certainly. Listen, great to get a chance to talk to your audience. So I'm Chris Park, I'm co-founder of DeFinity. In the larger group, I sort of fulfill the role of CFO as well. My background is probably 20 odd years in investment banking. So everything from leverage finance and private equity through to trading, structuring, derivative sales, and so on. So fairly long vested, but originally I was an electronic engineer. So I had a slight idea about electricity and tech and what's going on. Worked a little bit in the dot-com boom days, managed to survive that, worked with some of the big innovative companies. So it was great. And I say a few years ago, joined up with Manu and the rest of the members, and we sort of started DeFinity, building on DMA Link's sort of great FX franchise and all their banking relationships. And really, it's been sort of go since then. So delighted to be on here, and a bit lovely to chat.
It's great. DMA Link has been trading since 2017. They have 40 live institutional clients, including 16 banks, over $1 trillion in foreign exchange trades completed. And you've had, I think, your best month ever so far in July. And then you had your best day ever in early August. Can you tell us a little bit about the growth of what you guys are doing over there?
Yes, no, absolutely. I mean, what's been incredible is, we've obviously been on this journey towards regulation, and I guess we'll get to that in a minute, but we've been on this journey to provide this full institutional service that recognizes the difference in digital assets and crypto from TradFi assets, but enables financial institutions to come and trade the same way with all the right controls and checks that they would need, but to be able to trade into crypto and digital assets. And, I guess for any of your audience that sort of haven't come across it, bigger asset managers, pension funds, and financial institutions have got a lot of guidelines and regulatory frameworks around them as to how, where, and when they can trade. And a lot of that's about regulation. It's about the credit counterparty. It's about investment rated companies. It's about segregation of the key factors of a trading venue. So segregation of, custody, settlement, execution. It's about independent mids, all sorts of things that they have to do to be able to trade in size, which provides protection to the asset owners, value in assets. So, that's what has been really exciting for us, is that was our road to build. And on the way, we built out of what we call our small cap proof of concept business, which was the start of the trading journey, really showing how this would work, getting all the pipe work and the plumbing done, and making sure we were ready for the regulation to hit the ground running when we started. And the small cap business, as we now call it, rather than the proof of concept, has been so popular that month on month, we have grown, I think, in revenues about 100x from where we started in our first month of trading in digital assets. So every month we keep on growing. August, touch wood, is showing again to be another very strong month, possibly again even more month-on-month growth, which is crazy, because this is the summer. Everyone's meant to be lying on the beach drinking pina coladas, and instead they're trading digital assets across our platform. So it's almost like we built two businesses rather than the one we originally intended, and it's been a lot of fun, and it's holding up very well, and the demand is stronger than we anticipated. So it's been great so far.
What you got, Rain? You're on mute.
It's been crazy from my end watching as you guys have worked on this concept for the past couple of years to see it go live and see the kind of traction that you're getting. Now, for those that don't know DeFinity, Chris, how do you explain to them how you open up this additional inroad for institutions to be able to trade crypto? Because most people are only aware of institutions being able to buy crypto essentially through ETFs or directly on their books. What is it that's different that DeFinity is doing?
Yeah, absolutely. So we know there are one or two global players who seem to manage to straddle so many jurisdictions that nobody's quite sure who to please. So we'll say remain nameless at the moment, but there are one or two people that tend to do what they want. But pretty much every asset manager, hedge fund, etc., below that has a set of rules and criteria they have to fulfill. And one of the biggest things that's been holding back the growth of institutional crypto has been the credit quality of the institutions. So after the financial crisis and TradFi, there was a far, far greater lens shone upon how banks and funds traded with each other and what risks they were allowed to take and what supported those risks to basically stop a repeat of the systemic problems that happened in the financial crisis. So that means those rules then have to be applied to all asset classes, including crypto, for them to hold it directly. And what we have done with the regulation out of Jersey, which would just gone live, and with the tier one investment bank that we've partnered with from a credit intermediation side, is actually we've given them access to trade crypto through our venue, but they can choose their own custodian. They will trade through us, and we will bring them prices from multiple liquidity providers, which means they can demonstrate best execution, which again is something they legally have to undertake from a regulatory standpoint. But most importantly, the investment bank will actually support the credit of the transaction. So in layman's terms, it means if the person they're trading with trips over, the investment bank will step in to make whole that trade with cash or bond collateral that was deposited at that investment bank at the beginning of the relationship. So this means they're basically trading against cash credit risk. So that means that they can actually scale up their trading opportunity. Now, because we're regulated, because we've got the investment grade credit backing, that means they don't have to be forced to go down through the ETF route and pay the high annual fees that these big providers are giving them, because that's basically just giving them a wrapper, which is a slightly inefficient way to trade, but it's giving them a wrapper that ticks the boxes that we have managed to tick for them directly. So they can enter the cash market without breaking any of the rules that they're bound by. And that's really what we've been building. And it's taken a couple of years to get there. But we've applied an awful lot of the technology, a lot of the legal frameworks, and a lot of the expertise that we understood from TradFi assets. And then we've also recognized the difference for digital assets and crypto. And basically we blended the two together to sort of make the inflection point. And that's really what our secret sauce is. We're not trying to treat crypto like a TradFi asset. We're not treating it like a stock or like foreign exchange currency. Likewise, we're not pretending that institutions can come along to a DEX and just play around like you or I may do. So we've sort of brought both sides to the middle so that the institutions can come without breaking any of their rules, can come along and they can enter the cash crypto market without having to pay the big ETF providers these really high fee charges that they're applying just for giving the privilege of access to the market. So that's what we're doing. And the great thing is everybody we've spoken to is really excited about it. Jersey as a jurisdiction is very funds focused. And that was one of the reasons we chose it. It's obviously close to the FDA, which is close to the SEC, etc., but it's very funds focused. So it's very focused on growing out asset management, alternative areas of investment, and that's all the sort of stuff it's working on. So by bringing Jersey in, which is a credible jurisdiction, we're creating a venue that is usable by these global players, and that's something that doesn't currently exist. And that's kind of why we're so excited, and why people we're talking to are getting really excited about it as well.
Yeah, as I think about business investment and the types of businesses I'm interested in investing in, I like to look for ones that are solving problems in the blockchain or crypto space. And I wasn't aware prior to speaking to Manu of this problem and this potential solution, right? Because I've never been an institutional player. But for those that are watching this, think about it. Say you're an institutional player and you have billions of dollars that you need to hold. You don't want to send $1 billion, say, over to an exchange like FTX and have FTX holding your money. And then who knows what is happening with that money behind the scenes, as many people found out the hard way. Oh, yeah, they might be borrowing against it to buy other assets. They might be like siphoned away for other things. And you think your funds are safe. Well, institutions have to know their funds are safe. So DeFinity put together a way that the funds can be held at banks that these institutions trust, and they can then trade against those funds held by those banks. So FTX isn't holding anybody's money, isn't holding any of their money. The money is being held by these different banks, and there's several that they can pick from. And as Manu explained it to me, I was like, oh my gosh, that's genius. And I didn't realize this problem existed. But the big institutional players have to be very conscientious of who's holding their funds. Otherwise, they're not being a strong fiduciary on where the money is being held. They're not doing they're not taking responsible action. So this lined up a solution to a problem I didn't even know existed. But once Manu explained it to me, I was like, wow, this is a huge problem. Now that we've seen DeFinity's platform actually go live in kind of the test phase prior to getting the Jersey license, what's been crazy is seeing the month over month growth on the trading volumes that you've seen.
Yeah, I think that's one of the things that also, I don't want to say surprised us. I'd like to say it was carefully planned out and we knew it was going to happen. The reality is, because we've been working with banks and financial institutions, large hedge funds, with regulators and so on for so long, what we take for granted actually to a lot of institutions has been a little bit of a breath of fresh air in the crypto world. So we're people that they'll see in other asset classes. So because of, if you imagine DMA doing foreign exchange, DeFinity doing crypto, well, actually to them, it's just, okay, I already trade with you in one asset class. I'm happy with what you do there. I now just add on another asset class. So it's not like we're not a known name. It's not like they don't trust us. It's not like we've turned up at the door and say, hey, we're new kids in the block. We've got something really exciting for you. To them, they just see this as an extension of the service we're already giving them and they're already happy with. And it looks and smells like the way they will normally trade. And that's the key thing. We're not trying to get them to learn new tricks. What we're doing is we're giving them the new asset class, but we're giving it to them in a flavor that they're already familiar with. And again, that's been the key. When they see the legal documentation, when they see the bank counterparties, all these things, they're all familiar, which means that as well for us, the time to get them on board and to get them up and running is also a lot faster. And on the proof of concept and the test case side as well, where people have been obviously nervous about dealing too much with, say, some of the more traditional crypto names and exchanges, what we found is, because we've been working with them for a number of months, because they know us from other areas, actually, even for the test phase, some institutions are growing their revenues and volumes that are coming through us because we've got that trust and knowledge and relationship that's long-standing and already existing. And that's really, really nice to see it come through.
Oh, previously, before this Jersey license was announced, everyone in the comments saying congrats. You guys were responsible for trading foreign exchange and precious metals. And typically those types of things, they have pretty thin margins. And normally people would say like, oh, trading that's going to be really hard, especially if you only have, one or two partners. But you guys had 40 live institutional clients, including 16 banks, which made it worth it because you had so much volume with that. You're able to make some fun. Now that you have the Jersey license and you're able to focus on institutional crypto and fiat on an off ramp, well, now that opens up a whole new ballgame because those margins are much, much thicker. You don't have to go over exact numbers, but do you think you'd estimate some percentages like, oh, we're X amount percent thicker margins now that we're at here as opposed to just precious metals and foreign exchange?
Yeah, no, listen, the margins for foreign exchange, for example, are tiny. Yeah, there's no getting away from it, but it's a big market. It's like $7 trillion a day of volume. All right, so that's a lot of change, going across the desk. So even though it's very, very small margin, because the numbers are so big, you can still earn a crust. Let's put it that way. You can still make a living, even in a very small percentage of 7 trillion a day. The crypto market is much, much smaller. Yeah, it is significantly smaller. However, and it's hard to get an exact gauge on it because lots of different sources look at different areas, but it's at least a tenth or at most tenth of the size. It's current estimates. Yeah. But one of the things that we have found is even though it is smaller, the number of big established players that are monopolizing it are far fewer. But to your exact point, the margins are significantly greater. And we're talking, in many cases, a multiple of, double figures, and in some cases, potentially even, up to 100x of what you would expect to see in foreign exchange. So even though the market's slightly smaller, what we're bringing to market and the fragmentation of the market as it stands means there is a much bigger opportunity for us. And also just on every dollar that transacts across the platform, then we're seeing significantly higher margin opportunity, significantly higher. And that's really one of the things that make it more attractive. So volume wise, we might not get to quite the same number of zeros that we see in FX, but in terms of actual revenue, so how much margin do we generate from the big number of flow, then that number, crypto is screaming ahead, and it will be significantly the biggest proportion of our business from a revenue perspective going forward.
And when you go and you talk about already existing clients, that you have a bunch already, but now that you have this Jersey VASP license, the virtual asset protector, and you're AML D5 compliant, and everything looks great on paper, it's like a lawyer's wet dream. Like, oh, this is perfect. A lot of different companies are really scared to work with crypto because a lot of crypto companies, either yourself or others, they just didn't have that investment grade. They didn't have these licenses, and now that you do, a lot of investment grade counterparties and stuff can work with you. How much growth for partners do you expect over the next year?
So I think from our opportunity, it is huge. And the reason is a lot of the people that we've traded with before, the significant proportion, and actually our investment banking partner as well, a lot of their clients that are very keen to get into crypto have struggled to do so because of all the rules and regulations we've been talking about. So I would sort of say two things. We think there is a significant pent-up demand. And you can see, even though if you look at the prices that ETFs are charging, for crypto, and really saying kind of one crypto significantly, yeah. So forget the sort of half a dozen, 10 or whatever we could offer access to that still fall within the size that they're alternative assets. But apart from all that, I think these people have not been able to break into cash crypto, but they know that they have to because the size of the asset class means they have to include it in their basket. So it's moving in that direction. In terms of the people that are already trading assets with us or with this bank that want to move into crypto but haven't been able to touch it so far and have been sitting in the sidelines, then double figures in the very short term when it's fully switched on and live. We expect to see 10, 20, 30, 40, and we've got a very strong pipeline, both of our own and also for other people coming in. So I think that for us is very exciting and huge. And what's lovely is that other people in the ecosystem, people that we already work with, are saying, we know people that are desperate for this. So it's not even like we have to go out and find people to trade with. We know where they are. It's really just opening the taps for them. And again, that's significantly different from, foreign exchange, existing asset classes. People have got to go out and justify and work. Here, we know there's a whole group of people that are desperate to either enter the market or to reduce the cost of being in the market because of the high fees that ETS charge on a recurring basis. So they're just waiting to come on board. And the other bit that we've worked on very hard, and you touched on it a little bit about regulation, we spend a lot of time not just with the Jersey regulator, but we've also spoken to UK regulator. We've spoken to people in Europe. We know, I know their Manu's best friends. We know the SEC at the top level. So we spend a lot of time because we recognize that actually for the institutions to come in, you also have to try and create an environment that works for them. And while people are writing the rules, it's better to get into the room with them and try and help educate them and shape the way they write the rules. So then as the bigger economies formulate their regulation and rules for digital assets, then you've helped them shape them in such a way that will work. And I think that's the other key thing as well. Just trying to get inside, not say poacher turned gamekeeper, but if you can get into the room with these guys and just tell them how things could work in a sensible way and help move them in that direction, then I think that's also key. Because regulators, in many cases, many countries have put their hands up themselves saying, we don't really understand this. So we know we have to regulate it, but we don't quite know how. So helping them understand how to regulate it also helps us make sure the regulation is something that's workable for the industry. And, the signs so far, despite one or two curveballs, I think the signs so far are good and strong.
Right.
Yeah. Well, they also say when legislation is being passed, if you're not at the table, you're what's on the table. Yeah. And a lot of it has to do with just regulators don't know what they're doing with this, right? So a lot of some regulators are really new, but regulators themselves are usually a government appointed position. They may not be completely up to date on what the technology is. And then they're controlled by politicians who usually are not really up to date on what's going on either, because they're trying to juggle 500 different issues that they have to try to stay up to date on. And so being able to inform them and say, hey, here's our ideas, and kind of educating them. It's not that politicians aren't smart. It's not that regulators aren't smart. It's just they need somebody to fill them in and give them some ideas, share what the pros and cons are, and why your suggestion might be beneficial. And then if the regulator is fair-minded, they're like, oh, yeah, okay. And that's how, like in the 90s, I remember sensible legislation about this new thing called the internet. And some people just wanted to shut it down, and they wanted to ban email because email was going to make it hard for the U.S. Postal Service to compete. And regulators got in there, they got educated, they passed sensible regulation that wasn't very burdensome, and the internet changed the world for the better in so many ways. So hopefully, I really think of crypto as really just internet or web 3.0, and allows the internet to do things it could not do before. And it's a good time for regulators to get up to date again, and politicians get up to date so that smart, sensible legislation can be passed. And we're seeing that, right? DeFinity has been working with them to lay out a path that kind of makes everyone happy. So these institutions have their funds at places that they should be safe, and they're able to then trade these crypto assets in a way that should be safe. Create some really big wins within the existing frameworks that, when Manu was laying it all out to me, I was like, oh, this is genius.
Yeah. And the exciting thing is that, beyond this, we know that the banks are already starting to look at ways, and they're already creating platforms to put things like fixed income bonds onto blockchain rails. And the wonderful thing about crypto and about blockchain is there's a far greater ubiquity between asset classes than you exist. So, for your audience that may not have experienced sort of firsthand investment banking and trading, then the way banks operate ridiculously is in silos. So They have, fixed income, so bonds in one place. They have equities in another place. They have foreign exchange and commodities sort of sitting in another bucket over there. But actually going between those silos is very difficult, very clunky, and uses up lots of banks' balance sheet, and there's a lot of frictional cost. The great thing about crypto and blockchain is it's demonstrating that there's a way to build something that starts to break down those barriers. So, crypto, first cab off the rank, blockchain and crypto, how it all moves, how it works, how the transfer of value, how banks custody it, all these things are getting developed and understood, and they're growing, and the industry around them is maturing at an incredible pace. So if we then look at the fact that banks are looking to put other assets, some call it real world asset tokenization, some on-chain assets, so direct issuance of bonds. But the big banks, the JP Morgans, the Goldman Sachs, HSBCs, the big global banks are looking at putting other assets on there, as well as new and exciting projects looking at ways to do it. And what is great is we're a secondary venue with credit support. So once something is tokenized, then going forward, there is no reason why we can't just continue to develop our regulatory status to accommodate other asset classes beyond crypto. So crypto, stable coins, we already do foreign exchange, fixed income bonds, whatever other real world assets get tokenized. We're a venue. We're kind of agnostic in a way as to what it is. So asset managers can come along and they should be able to trade, I'd say Bitcoin against, JP Morgan bonds or BMW bonds. They shouldn't have to go through 5 different intermediaries to do that trade. If somebody makes a price on it, we can show it, and our infrastructure supports it. So, that's what's really exciting. It doesn't sort of stop here. It keeps on going. And also that's why we've developed, so many partnerships, is we want to be at the forefront of all the, with the custodians, the development of that. Our recent partnership announcement with sort of Kima, the settlement solution that we're looking at. So how do we have a cross-chain sort of custody agnostic settlement solution that sits behind our venue? So we're looking at work around that. We're working with them to see if we can get a true sort of zero knowledge proof smart contractless settlement solution that is cross-chain applicable. So that's again one of the partnerships. I know Manu's talked about our AI anomaly detector and so on before, but again, that forms part of the risk management. All big institutions need risk management. So, rather than just sort of sitting here waiting for the market to mature, we're doing our best to work with people that we believe are creating new and exciting and innovative solutions to some of the problems that exist in the industry. And as the industry grows and expands, we're part of it. So we've not built a boat and we're sitting waiting for the tide to come in. We're actually working with people to make sure that we're helping the entire industry to develop and mature, which then makes our product have a greater growth opportunity and more applicability.
Ryan, you're on mute.
As I was thinking about it the last 2 years, often like people ask me what I do and they're like, oh, what do you do? And I was like, well, I invest in early stage businesses in the blockchain space. But what I realized that a lot of people don't realize is some of these early stage blockchain businesses in 5 or 10 years are going to be some of the biggest companies in the world, because they just are this new nascent class is growing. But like 15 years ago, Facebook launched, right? And you could share some photos and people didn't realize the real world implications of that. And some of these businesses that are providing real world solutions are going to have massive revenues that people right now just don't even realize. And it's exciting to me because I being so deep in the weeds here, I can see what's coming together and I'm like, oh man, this is huge. And most people have no idea how big this is and how big blockchain just, it makes so many things just more functional, right? Because you have cryptographic encryption combined with blockchain, you can do things like tokenize stocks. And those tokenized stocks, somebody can have a login, they can go and change where they want their dividends sent. And it allows things that could never have been done before. Even though the internet was available, the internet couldn't do these things, but now it can. And the implications of that are gigantic. And businesses like DeFinity are like, okay, how do we take existing infrastructure and connect it to where this is going? And it's been really exciting to see this come together.
Yeah, listen, it's been a lot of fun building it. It really has, and kind of the regulation, everything that brings is just a massive sort of tick in the box, and kind of another giant step forward for us. We've got so much going on or sort of around that it's also, it's not a one-trick pony. So this hopefully isn't the last time that we're sort of on the show telling you about the next big step we've made forward, because there are so many things lined up behind it. Even although we are institutional in the retail space, some of our partners, one of our strategic partners, which will be another announcement coming out soon, they have 7 regulatory licenses, including a banking license across much of Asia, dealing with consumers. So they're B2C. And we're a strategic partner because we're working with them on the B2B bit that they then take to C. So we're basically providing them access to the big liquidity and so on. So even though we're an institutional partner and we won't have 1 billion customers, because there aren't 1 billion financial institutions in the world, some of the people that we're working with are targeting massive parts of the global population. And we'll be sort of standing there helping bring the liquidity, helping bringing the structure into what they're taking forward to mass market. So, again, it's really exciting. And I absolutely agree with your point 100%. I remember being a technology banker back in the days when Google was just sort of kicking off, when Microsoft was sort of trying to squash Linux, which, all these things were going on at the time. And you were looking at these business models, so yeah, Facebook, yes, Google. There was another one in the UK called Friends Reunited, which didn't make it because it didn't have a real revenue thing. I remember Google, they used to talk about, well, where's the revenue going to come from? What's the sustainable business model? You look at this company now and you think 20 years ago, people were scratching their heads looking at this thing. We know it's going to be big. We just don't know why, So yeah, it's really exciting to be in. And some of the players that we're working with as well, some of the traditional institutions, some of the new entrants, what's so exciting about them is as they develop and grow, already we're with some of the big boys, and some of the guys we're working with, we believe will grow alongside us to be significant players in different parts of the infrastructure themselves. And that is great, sort of no man needs to stand alone. So, we're happy rubbing shoulders with the big guys as well and just keeping in that company.
I've seen that recently. You had obviously the Kima partnership. So when they announced the partnership with you, I think they had like 480,000 followers on X. Now they have over 500,000. And then earlier today, you had someone named El Crypto Prof, short for the crypto professor. And he has 131,000 followers that they'd posted about you, which I thought was really cool. And to my knowledge, you guys aren't paying any of these guys. But Chris Aspie is saying, what's the typical lead time for onboarding institutions to the bank model? And do big partnerships like this or big announcements like this from big people that help get eyes on it, will that help them do it quicker?
Yeah, yes and no. I mean, I think one of the UK's biggest hedge funds did say to us, what we like about what you're bringing to the party is because we already trade with you on one of the other side, is, you're already trading FX with us. So for you, we can add another asset class onto a relationship with you. You're already trading with the people that we work with, the banks, etc. So for us, the onboarding speed, the onboarding time is significantly faster. It's not overnight, It's funny that hedge funds and high frequency traders, although they do big things very quickly, actually to get them started, it still takes a while. It's like pushing a big old juggernaut to get them going. But when they get going, boy, do they go. So for us, it will be significantly faster than a crypto native, only ever been in crypto participant to come along. And, their compliance and legal teams have told us that it's now impossible for them to onboard many of the crypto names just because they can't get them through the process, whereas they're already working with us. So I think that's really exciting. That's a great opportunity for us. It will enable us. Now we've got the license. Now we're moving through the steps to get there a lot faster. So that's great news. In terms of the awareness, what's exciting and great for our community and everybody involved in the project is, because we're an institutional player, it's not like lots of people come along and actually use our product directly. So what the community love about it, and this is why it's been sort of slightly different, maybe slightly slower than you might see in some other projects that create a lot of hype, but then things don't always quite work out. For us, we've actually created a cash generating business model. We've got a regulatory license. It's there, it's real, it's solid. It's not just an idea. It's not a white paper. It's actual reality. It's churning dollars, in Tether. So it's superb. But for the influencers and for people who are very crypto native, because they've not been able to touch the project directly, it's taken slightly longer for the word to spread. And that's one of the things that we're sort of finding exciting, is getting out there and saying, hey, we're real. We've survived the winter. We've built this thing. We've taken the body shots. We've weathered through it. We've got something really exciting, and it's going like topsy. So, we're on the way, and this is what we're up to. And it's a great opportunity for people who are not institutions themselves, but who want to participate in the institutionalization of crypto, to come along for the ride. And that's something that is quite difficult to achieve. Often what happens is, when the big financial institutions come into a new asset class or a new industry, they often take all the toys and then take them back off and play amongst themselves in the corner. And they kind of freeze out the early adopters. They freeze out the people that started the industry, and kind of hoover everything up and run off themselves. And there was an early Bitcoin adopter who told me, this was just a weird tangential one, but he said existential risk for Bitcoin is that ETFs get too big. People trade in and out of ETFs, but net there's little flow. He said, well, what happens to Bitcoin? He said, nobody needs to do anything with Bitcoin. Nobody can go away and, there's no need for any kind of validation. there's no farming or anything, because ultimately, if somebody buys $1 billion ETF from BlackRock and somebody sells $1 billion ETF, but the Bitcoin stay in the same wallet, then no Bitcoin move. And that kind of undoes the whole purpose, the whole raison d'etre of Bitcoin. So I think from our point of view, it's great. We're doing our best to make sure that the people that started this industry and the people that are interested in this industry at a grassroots and at a retail level can come along for the journey and participate, even though the big boys are coming into the room. When HSBC.
People are great.
Just jumped right into the big questions.
Yeah. No, I think, as we go through the banks, and, obviously we have to be careful about how we announce what we release. And, big banks, big financial institutions take their privacy and secrecy and their thick NDAs, they take it all very seriously. So we have to be careful. The other fun thing is, I guess, to make sure we can update the community and everybody as much as we can without breaching any confidentialities, and also making sure that people understand that things are kind of happening, a little bit like the proverbial duck. There's a lot going on under the water, but sometimes it doesn't look like there's much activity, but the legs are going pretty quickly. And getting big financial institutions and banks to come to the fore and to do something that's not been done before always takes a little bit of time. So we might not be as much sort of flash bang, flash bang, flash bang, flash bang as you see with some other projects, but hopefully when the flashes and the bangs come, they're going to be bigger and a lot more exciting.
I love that. On the custody and use, we had recently got listed on Fireblocks, and a bunch of the other tokens and products that are on Fireblocks, they are around a $200 million market cap, give or take, or a minimum. And DeFinity is conspicuously absent from that $200 million market cap list. We're very, very small micro cap.
Yeah.
What did you guys have to do to get listed on there? Considering you guys are so small, like how did you go and convince them to list, even though you guys are very small micro cap?
Yeah, well, clearly, apart from obviously using their platform with a bunch of big institutions, one of the things, and they weren't the first people to see this. So again, some of our other partnerships coming up, the token, DEFX, we're talking to some of our partner exchanges and some people we work with, and they often set from either a credibility perspective or from a governance perspective or from a visibility perspective. They set a very high hurdle that normally is only fulfilled by big projects and big tokens, as you say, with large market caps. But when we've approached them, because we're a participant, because of the regulation, because we're dealing with financial institutions, then actually we can tick a lot of those boxes without waiting to get to the 500 million market cap, where actually we're perceived to be big enough. So, we're being smart about it. We're not going to try and buy our way onto sort of big exchanges that don't really deliver value in the short term. There is no point paying $1 million to get listed in a massive exchange, today. It's not a good use of capital. We can build an exciting business that generates cash and grows the industry rather than paying to an existing exchange just to get a listing. So we know there's a time and a place for everything, but we also know that strategically, because we are key and we bring something to the party as an industry insider for these places, for these service providers, technology providers, custodians, some platforms themselves, some layer ones, some exchanges, because we're a part of their industry and we're a provider to them, then actually our access and our give to them means that they can give back to us in a way that is way beyond where we'd be from a token perspective in isolation. Yeah. So we don't have to deploy 2, 3, 4 million just to get onto this exchange. We don't, because we're already dealing with them. We already know them. We're strategic to the industry rather than just pay to play. And I think that's key. So it might take a slightly longer to get there in terms of the number of exchanges. It might take a slightly longer to get there in terms, as you said, some of the influencers and some of the big, crypto news feeds, etc. It might take a slightly longer to grab their attention, but the bigger we get, the more we can demand their attention, because we're also key to the whole industry rather than just being a small siloed token. And I think that's, again, a differentiator about our token versus so many others.
And you guys also have the positive attributes of the insane fundamentals, which are absolutely incredible. So that'll get the smart money on board. But then there's something that I guess a lot of meme coin chasers have called pumpamentals. And as part of the white paper and part of that draft that you guys talked about, you can't say any specific amounts or the percentages have to be random. But as the profits tend to roll in and they get bigger, you guys will do buybacks at some point. I don't know when that's going to happen. Can you give us some light on what would be first priority? Like, is first priority growing the team and hire more people? Or when the profits come in, are you say, hey, we need more exposure and liquidity, we need exchanges? Or are buybacks part of that first priority?
No, I think buybacks are sort of up there. We've kind of recognized that, particularly with the small cap, we'll call it the small cap business rather than the POC or the test business now, because it's a big business in its own right. So I think the small cap business is at a level where we can support a lot of the development, we can support a lot of the growth, we can continue to drive that. So we'll be freer to. So he says this very carefully, making sure that he doesn't do anything that kind of provides any indication or any forward guidance or anything like that. But we will be able to pursue the buybacks and burns. In terms of the other aspects of the tokenomics, we're far more in control of those. And the exciting thing is they're not token dependent. The market cap of the token isn't going to be what drives our ability to do a buyback. It's the cash generation from trading across the venue. Yeah. The anomaly detector exists without the token running it. So if people want access to it, they can get discounted access by paying in tokens. So institutions can come along and pay for this, this kind of cutting edge AI, leading edge AI, and get access to it by buying tokens. So actually, we can create the drivers for people to buy it, but we don't need anything per se from the token. So the token can't undo the business, but the business can support the token. So again, we're very, very unique in that, compared to a lot of other projects. We're quite unique in that aspect that we've built a tokenomics that what we do commercially trades and supports it. And therefore our destiny is a bit more in our hands rather than in the market cap. So if the market continues to do nothing with the token, we can still pursue our goal. We can still create demand for people to buy it from an institutional side. We can still do the buybacks as a proportion of revenue because these things aren't connected to the token price in any way.
Yeah. I'd love it if you were able to do a bunch of buybacks and burns while the price is down here. But unfortunately, I think that's impossible. I think as people get attention, the price will go bananas, and then you'll.
it would be good. It would be good to do it, and we've always tried to balance that. And your point was very well brought out. It's, do we take cash out of the business to buy tokens now when they're cheaper, knowing that by not investing in the business, the future cash generation of the business will be slightly lower in the short term, which means, so it's a balance. It's, do we invest in the business to create a bigger, stronger business that generates more cash, recognizing that it has to pay more per token to buy back? Or do we divert cash now to buy back more tokens when the price is lower, but then slow down the rate of growth of the business? And generally, we've erred on the side of growing the business, because ultimately we can then take our time to do the buybacks because we know we've got the good cash generation. We know we've got solid fundamentals, rather than rush to look at the market side and the token buyback side ahead of creating a robust business that will endure. So that's our focus, has always been to make sure that we can kind of stay, because that way we know we can make sure that the token will survive the winters, the bear markets, and not just be there for the bull markets.
Yeah, I think you've got your priorities in order, right? I always like to see the business get more robust before spending a lot of capital early on for things like token buybacks. Although the advantage of early token buybacks is your market cap is ridiculously low just because the awareness level on it is low. And this frequently happens. Like Uniswap was out for years before even people knew what it was. And so some of the projects that become gigantic later are really small early on just because the awareness is low. And people aren't searching for it because there's so much out there. It isn't until like usually a narrative hits. Within that narrative, everybody becomes a super sleuth on, what are the best projects in this narrative? And then your project, quote unquote, gets discovered. And then as it goes crazy, the price goes crazy, then awareness really jumps as people look in, well, what's this project? The price is going crazy. And then they research it, and then they become an expert on your project. So I've seen many projects go through that evolution that for a long time they're relatively unknown or completely unknown. And then they, quote unquote, get discovered and go crazy. I mean, one of the big examples of that is Aave. Aave went like 1,000x in the last DeFi summer that happened in 2020. And it went from almost completely unknown with the name ETHLend, and they changed it to Aave right as DeFi was taking off, and their token price went 1,000 times.
Yeah. Well, now the fundamentals are here. Hopefully some of the good news, the exciting news. The one that I'll be honest, we haven't quite cracked is sometimes we get really excited about something that's happening in the way the business is developing. So be it regulation, be it banking partnerships, be it something, we kind of jump out and say, hey, we've got this to announce to everybody. This is great. We're now working with a global financial powerhouse. And sometimes it always makes me smile. The kind of crypto community are too cool for school. And they're a bit like, yeah, and
Yeah.
We don't need banks anymore, so why should we be excited about this? And it's like, no, seriously, it's good for the project. Yeah, whatever you think about banks in general, this is good for the project, which is good for the token, which is so. Yeah, it's definitely, it's an interesting way of thinking. It's a different mindset, but yeah, no, we genuinely believe is absolutely to your point. The more the acceleration and the growth and the development come through, the more awareness will come through, and then hopefully timing will be good for that boost from the token point of view. As the community gets sort of bigger, we get more holders, and we just see a lot more participants. So yeah, that's absolutely on the roadmap.
Yeah, having something, I think one of the challenges to people knowing DeFinity is it's outside the realm of their day-to-day business. Although once it's explained to them, they're like, oh my gosh, that's a really big deal. But because most regular crypto people haven't done institutional grade, like foreign exchange transactions, or thought about, oh, where is XYZ institution going to house their $3 billion that they're then going to trade against? But once it's explained to them, they're like, oh, I can understand the need for that, and why that's exactly how institutions are going to love being able to trade crypto. Because especially institutions with all these existing regulations, they can't just jump to the future. They have to go within the frameworks that are already there, which is kind of what you've done. Like a lot of times when bridges are built, they build from both sides, from where things are at existing and from the other side, and then it meets in the middle. And what you've done is taken the whole side where all the existing players are at and built it out like this, so they can then come across that bridge.
Yeah, no, absolutely. I mean, it still makes me smile that when you do a foreign exchange trade as an individual, if you've got a multi-currency account, or you use a Revolut, or whoever it is you use, a Monzo, whatever payment card you use, MasterCard, whoever, you expect that transaction as a consumer to happen pretty much instantly. If you're JP Morgan and you're selling $2 billion against euros to HSBC, that trade takes 2 days to settle. So you're going on holiday and paying $10 for a drink, you see that happen straight away. But for financial institutions, the big bucket trades that support that take 2 days to settle. So the inefficiency that exists in wholesale markets as well is massive. So from a, exactly what your point, what you said was, hey, most people don't understand the problems and the inefficiencies that sit behind the shiny veneer of big banks and of big financial institutions. And when actually you get behind the curtain, it's a bit like the Wizard of Oz. You pull back the curtain and there's a bunch of little blokes with gray hair pulling and pushing levers. It's still very manual. So, that's what we're trying to build out something that kind of takes that away, takes the friction away, and just helps these things sort of happen in a manner that has become native to people from crypto land, but to financial institutions is still, it's still a pipe dream. So this is what we're bringing to them.
So getting back, you mentioned before the anomaly detector and how big institutions would go in and want access to that. And there's multiple ways to pay for that. Like you would be able, on the discount trading fees, they could choose to be invoiced in DeFinity, or at least part of it in DeFinity, and that would get burned. So when they do that, Chris was asking, how do they get that DeFinity to go and pay you? Originally, do they go in and they have to buy it from DEXs, SEXs? Can they do OTC deals?
Yeah, so that's very, very good question. And, it is something we sort of have thought about. So some of the more developed digital asset funds, crypto hedge funds, will know how a DEX works. Not many use it because of regulatory requirements, but some will know how it works. Some will be aware of smaller exchanges. But again, a lot of bigger institutions won't have access to MEXC or so on. So The two strands we're taking to that is we are working with, because we work with not just the guys that we're listed on, but also we have strategic partners and clients and partners that are also exchanges that have, to different degrees, greater and lesser regulation, and therefore maybe more acceptable to financial institutions to trade with. So we're already putting the pipe work in there to make sure that DEFX is available through them to the financial institutions that need a locally regulated venue to go and buy. The other thing, obviously, we can do is we can, with those, for some of those institutions, accept from them, fiat to do the purchase on their behalf. So again, that's another sort of route to do it. So we've got a couple of ways we can do it, rather than expecting, a global asset manager to sort of log on to Uniswap or PancakeSwap and kind of deposit his stables and then check for when gas fees are good and go and buy his tokens and then send them over to us. We're making sure that we make that as frictionless as possible for them. So we're not we're not sort of beholden. And like I say, a lot of the bigger asset managers, although they're moving into crypto, we've seen it already with, say, for example, the ETFs. It started with Bitcoin, then obviously ETH, people are talking about Solana, etc. It's gradually coming down. You've mentioned our micro cap several times. So it's pretty fair to say that financial institutions, if they kind of have a list of tokens that they're allowed to touch from a regulatory point of view or from a compliance point of view, DEFX will probably be quite far down the list. It's probably not in the top 6 market cap tokens that they can get sign off to play with. So we're aware of that, and we'll make sure we give them the access pipe so that even if we have to do it in their behalf as a back-to-back, they can still benefit from discounted trading fees or get the anomaly detector paid for in tokens without physically having to have the compliance and regulatory sign-off to touch those tokens physically themselves. So
great. Very glad you guys thought of that. That's perfect.
Yeah. And like I say, some of the partner exchanges and some of the people we're working with, they will be maybe less known to the general crypto community, but have greater regulation. And therefore, for certain jurisdictions, they might well tick the boxes anyway for some of the financial institutions. So we're already working with them, approached them and looking at about how we make the token available through their platform as well and tick all their regulatory boxes.
Okay.
Well,
Rain, any rhetorical response to that?
What's interesting is that about every 4 years, crypto, and in the meantime, everything feels boring and slow as far as price action, right? So as people are looking at projects, they look at these projects and they see nothing happening with the price. So therefore it's boring, and they often pass up on the really, really good deals, because as an investor, and I think about this all the time, you have to buy low and then sell high. It's the most important principle in investing. So often as people and human beings, we wait till things move up massively and then we buy high hoping it goes higher. But this is why, like, I love YouTube. It allows people to do their research so they can look at things that aren't moving a lot yet and evaluate them and make informed decisions on what do you think is going to happen here and what are you seeing coming together. And then they buy it, and then they just hold till the broader crypto space goes crazy. And then as that happens, everyone turns into a super researcher, and they're like, oh, what is an undervalued thing? And then money gets thrown at those projects. And that's when market caps go massive. And that's how, as an investor, I make my money, is doing the research when things are slow and buying when things are slow, and then waiting until things go crazy.
Yeah. And it's a great discipline to bring in. And in terms of the anomaly detector, one of the first things we did, even with our TA, with Paul, the technical analyst, we sort of started working with way back when we launched the token. A lot of that was just trying to, again, it was different to the way that a lot of crypto investors started investing in crypto, and market fundamentals and more, they're not there in the way that you might see in some other markets at the moment, but still some of the investment principles that exist across multiple asset classes are coming into a lot of crypto projects, are coming into a lot of the crypto markets. And I think your approach is exactly the way that some analysts and investors would look at stocks, equities, or would look at bonds, or look at credit. that's exactly the approach we take. So we've always believed that if we can provide tools, not just to the banks, but also through, our own channels, a Telegram, etc., or through our stats page, to provide access to even a watered down version of the anomaly detector. The work that we did with sort of Paul originally in his technical analysis side, just to try and bring some of the investment principles that historically weren't as prevalent in crypto, but to bring them and then also show correlation between different asset classes and so on. So yeah, no, it's been something that we've always felt was really important to put sort of back out there, to make sure that we're supporting the community and we're supporting kind of the crypto ecosystem rather than just ourselves.
Now, Jason Pena had a good question. He says, question from an investor: it's important to know your comparison. Who is your biggest competitor, and what do they do better than you?
Yeah, tell us about the, I think a good example would be, I guess, the one trading, or Bitpanda. Just tell us that story and how that partnership came to be.
Yeah, so what's been great about crypto is, when a market gets mature, and we worked in here in trading floors and banks, it's all about cannibalization. So if your market's growing 7-8% a year, but your target's 30, yeah, you're going after somebody else's lunch. That's the way you've got to do it. So you're often maybe adding value to clients, but in many cases, you're just going to cannibalize the existing market. Because the crypto market, particularly over the last few years, has the way it's been growing, and in the institutional side, a lot of the participants have realized that by working together, I'll call them frenemies. So we're not talking about people that do exactly the same thing as you, but people who do something that might be a little bit sort of competitive, or might sort of play around the fringes, or there might be a slight overlap in your customer demographic, that sort of thing. So we've spoken to some of the, I'll call them sort of better or more credible or more, or players that we just have greater trust and experience with. And we said, listen, guys, if we work together, you're developing in this direction, you're going towards crypto derivatives, you're going towards a certain type of financial institution, you're going towards this jurisdiction, for example. So if you're developing there, we're starting from quite a similar place, but we're going this way. We're going cash, we're going big institutions, we're going sort of investment grade, we're going for sort of the replica of TradFi wholesale markets, but with crypto. So that's the direction we're going in. But actually, there are things that you do that will help us get to where we're going faster, and vice versa. And that was very much the way we sort of started with one trading. We recognized that there was a small overlap in the Venn diagram. So our customer bases were touching a bit, but we were going in one direction. We were developing a product, and we were working with a customer base that were a different target demographic from what they were doing. But by kind of supporting and working with each other to help develop our products, our liquidity, our market capacity, our capabilities, it meant that we both evolved faster and moved faster down our paths. And we're now very much moving in different directions. It must have been some week, but maybe it was just the fact that it was the middle of the summer holidays and the regulators were trying to clear their desks so they could head off to the beach for a fortnight. I don't know. But One Trading got their final sign off on regulation a week or so before us for Europe. So, they're out of Amsterdam. They are a derivatives exchange. So they can now market crypto perps to retail investors. So nothing like what we're doing. It's derivatives and it's retail and it's in Europe. So nothing like what we're doing at all. But we've known them for a couple of years. We've been working with them. We've looked at things, for example, the anomaly detector, risk management, trading partnerships, all these sort of aspects, recognizing that we can provide and supply things into their business model and vice versa. So it's a symbiotic relationship, and we're both pursuing our own targets and objectives, but they're well backed, they're credible, they're regulated, and they are, they, for example, could be a great venue because of the regulation for people who need a regulated counterparty to go in and buy through their sort of direct sale desk, for example, the token. So strategically as well, they could be beneficial to us. But yeah, big shout out to them as well for getting through their regulation. So it was, yeah, like I say, it was a good month for regulation.
It was. I love that story. It shows that you can get more flies with honey than you do with vinegar. You don't always have to compete. You could recognize that one does each other better. Obviously, because they're in derivatives, their derivatives offering is off the charts. But no one can compete with your guys' your spot offering, and it just made a perfect way to cross-pollinate clients.
They're an exchange. Ultimately, at the end of the day, they're your counterparty risk. They're well backed, they're well supported, but they're not investment grade. So, and their focus is not cash. So, you're trading with them as a principal. They're not just a venue, they're your counterparty risk and everything else. So they have a different offering, a different product. So even though they're institutional crossover high net worth, in terms of what they're offering, you could look at it at a very top level and say, well, you guys should be competing. But actually, our target market's here, their target market's there. That's great. And if we can add value to each other's business through liquidity, through trading relationships, through technology things that we've developed, then that means we both kind of solidify our position. And I think the structure of what we've created, so I see flashing up on the screen, people are talking about what's your competitive advantage? The advantage is we understand how wholesale markets work, and therefore we're not trying to bend wholesale markets to play like crypto, and we're not trying to bend crypto to just be a dumb ticket on an asset class in wholesale markets. So I think what our competitive advantage is, we've taken parts that are required from both sides of the fence and brought them together. And we've brought the credit intermediation and the regulation. And there is nobody else. People have talked about being prime brokers or investment banks in crypto. They don't have the balance sheets. Exchanges that are the central risk counterparty, they don't have the regulation. They just it doesn't exist in the market at the moment. So by deconstructing it a little bit and bringing the participants together who all have the right pedigree and the right CV, we've created something that just doesn't exist in a single entity anywhere.
There was a comment in the Telegram group asking like, hey, I remember back in the day, 2017, people had countdowns to their announcements. Now, obviously, this was a pretty big announcement and probably one of the biggest to ever go through. But as newer people get here, they're not going to remember this because they weren't here for it. So in the future, would you guys have any countdowns to announcements? I mean, you kind of alluded, oh, hey, next week we'll have an announcement. You said that last week in the Telegram. Any chance you guys might do that in the future?
Yes, I think one of the things we're learning, and yeah, maybe I should take some lessons from my kids. One of the things we're learning is that in TradFi, it's often one big announcement, and then you have a period of silence. And that's kind of often the way things work. People make an announcement, they don't give you frequent updates. They just say, hey, we're going to do this. Maybe because a lot of big financial institutions say they're going to do stuff and actually they never quite get round to doing it. So maybe that's why they never talk about it again. I think one of the things that we're learning and have learned is that, we won't have as many announcements because it takes longer for some of these relationships or some of these steps in the project to happen just by the nature of what we're doing. So we can't say every day, hey, we've done something new today. That's never going to be our business. It will never, we'll never iterate that fast. However, I think the point about countdowns and about letting people know that there is something coming down the pipes mean that if there's a couple of weeks between announcements or a month between the major announcements, because there's only so many times we can get regulated or partner up with an investment bank or sign up. So there's only a limited number of people that we can actually announce about, but maybe talking more about how the project's moving from that big announcement and then letting people know what the timelines are for the next big announcement will help keep that interest and focus on entertainment. And I think that's kind of one of the things, just to make sure that we kind of bring people along on the journey, rather than we're just kind of that weird uncle that pops in once a year and says, "Hi, guess what I've been doing?"
That'd be great. Any chance you might have an announcement, another one before the end of the quarter?
Yes. Yeah. No, definitely. I mean, there are a number of things going on, so we're pushing forward in a number of fronts, and definitely there's an expression over this side of the pond. It's like a bit like buses. You stand in the cold of the bus stop for a while, and then eventually 5 come together. Yeah. So anyone that's ever lived in London and had to take public transport will know what I'm talking about. But basically, that's a little bit what it's like. So we found that in moving everything forward, we've got to a position now where there's actually quite a pent-up demand of a number of things that we can bring forward. So yeah, it should definitely be exciting weeks and months to come.
Awesome. Rain, what you got?
Well, I'm looking forward to it. I've been, keeping in good touch with Manu, especially the last 6 months, in seeing this unfold and waiting for the Jersey license and, understanding what a big deal that is. So yeah, it's still like, sometimes people think when big announcements like this happen, the whole world then wakes up and gets it. And it doesn't usually play out that way. It's kind of like a major thing happens, and then it takes a while for everyone else to kind of get it. So we appreciate you coming on, because one of the reasons why I love crypto investment is this idea of unequal information. Now, if everyone around the world had exactly the same information, exactly the same time, it'd be really hard as an investor to make good money. Because what would research do for you? Because everyone has access to all the information. What I like is research provides you information. You can see some trends coming. Oh, this business is doing this, and that's going to open the door for this to be able to happen. And nobody knows about this business yet, even though their business model is very successful and is doing amazing things. And so therefore, the market cap is really cheap right now. Okay. And then I decide to make investments in that. And then I wait for the rest of the world to wake up to it. And that's where my huge gainers have come from, is playing out exactly like that. So appreciate you joining us to kind of share with the audience what's going on with DeFinity, and help people see why Randy and I are so excited when we get together and we talk about DeFinity.
And so obviously, thank you. And let's talk a little bit off camera after this, when we end it. But Chris, any final thoughts you have? You want to tell people, the 264 people that are here?
No, listen, it's great to get a chance to sort of to speak to you. I mean, we're, in terms of our communication engagement, the business is now humming, and the big things are happening. And really, one of the things that we're, the marketing has always been, let's do something, then tell people about it. But to your point, I think we really just say, look, watch the space. We're making the effort now to be more frequent about signposting what's going on and what's happening. And we want to increase the frequency of that. And we're very open to suggestions. I mean, what I really love about crypto is it's amazing the number of people that sort of come to you with ideas, with thoughts, with suggestions, with questions. That's the great thing about it. It's kind of, I know they have shareholder meetings, but I cannot imagine that Jamie Dimon sits at JP Morgan and gets the kind of feedback response, or people come up to him afterwards at shareholder meeting and say, hey, I've met this really great project over there. You should go and talk to them, because I think they can, you guys will work to develop the business. So, no, listen, I kind of love it. And it's great to get a chance to speak to everyone. And like I say, our doors, our ears are open. That's what we love about crypto, is the community and the way that people help each other. And, that's helped us where we are today. And, hopefully this will continue going forward. So really appreciate the platform, you guys.
Of course.
Sure thing. Jason Pena says, take their lunch.
Yeah. I've been having a few lunches. I'm glad this is just a headshot camera.
Same.
I've got room for more though, guys. Don't worry, I've got room for more.
Same. All right. I can't wait to meet up and party soon. Everyone, thank you so much for coming by. We'll end it here and have the post